Do you want to hit the road with Tesla Motors? We'll take a look. You know a lot more about cars than I do, and everybody knows Tesla Motors. What is Tesla? Tesla's an electric car. It's very popular, especially among higher-end buyers of cars. It looks a bit like a Mercedes or an Audi, yet it's plug and play. It's an electric car. It's very successful, and the company was launched by Elon Musk and went public in 2010. What about the shares? The shares have been on a roller coaster, mostly up, as you can see, but of late, they've come down, $213 a share. Is that cheap? Is that a bargain? Is that way overpriced? Well, the reality of Tesla Motors, whatever you might think of the engineering qualities of their long-lived batteries and their cars, is that the company loses money. Yes, it's a startup. Yes, they deliver cars ahead of budget. Yes, they have an excellent production facility, one that's growing. The reality is Tesla is losing money. So for me to say, wait, the price-earnings ratio is 121 times, it isn't, because there's no earnings in this company. There are losses. Now, those losses are coming down from about $900 million in a quarter to about $200 million. So very successfully, little by little, the company is wanting to break into profitability. When that happens, Tesla is a going concern. Until that happens, Tesla, very successful, good batteries, good client loyalty, a nice new Model S car that'll hit the road for about $35,000. All that's positive, but when you're buying Tesla, are you buying something that's built in for future success, 2, 3, 4, 5, maybe even 10 years? That's the concern I have. $213 a share. Do I think it's expensive? Yes. That values the entire company of Tesla Motors at about $31 billion. So really, the success of Tesla is factored into the equation. Do I think you ought to buy it at $213? There are some fair value estimates out there that say Tesla's worth $260 a share. Well, I think good luck to that. I like Tesla. I like what they're trying to do. I appreciate it that they're making their budget numbers in terms of producing cars. I think the Model S will be a success in the marketplace. I have no doubt about that. I think the battery will only get better and better, but I think it's something of a house of cards, Tesla, unfortunately, in terms of its finance. Yes, $3.2 billion is a lot of cash on hand, and that can pay for a lot of gigabytes in terms of a new factory to make more cars, all of which is positive. Yet I'm a conservative investor, and I feel the success has been realized at $213 a share. That's all the time we have this week on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.